Good morning traders, and happy Easter to you all. I hope you've all had a good Easter bank holiday weekend. I also hope you had a good week in the markets last week. Last week was a little bit of a tough week. We took our Aussie dollar short. We took it the week before, a couple of weeks before that, but basically it went on to hit our profit targets towards the lows. We then added an additional position to that, which we'll talk about in just a few moments. It didn't really go anywhere. Then we came up to the non-farm payrolls, and we had to take profits on some of those positions before the non-farm payrolls hits. And we were obviously also in the euro dollar short. And when the non-farm payrolls came out with a bit of a horrific number for us, and the markets completely turned around. We're not out of the positions yet, which is a good thing. It's just kind of hovering around there, a little bit out of the money, but nothing too much to worry about, because we don't think it really changes the bigger picture for us. We think that long term, the trend of the market is going to continue, although in the short term we might have to take on a little bit of pain to be able to pursue that view. So at the moment, last week was a bittersweet week. We had a good position on the Aussie dollar. We took profits at more than 2 to 1 there. We've then got an additional Aussie dollar position on now at the moment, as we do on the euro dollar, and we took the pound New Zealand short from last week that we talked about as well. Going into this week, there's not really that much on the cards. We've got one position that we're looking at this particular moment in time, but apart from that, it's really, there isn't a lot of direction in the market at this particular moment in time. Now, that's not a problem. That often happens. You know, we've had a good couple of months trading, you know, pretty much since we started the Forex Focus, we've had win after win after win. So the fact that there are no opportunities on the table is definitely not a negative thing. It's just the market's taking a little bit of stock of the situation. You know, sort of the what's the word for it? The market participants accepting the current price before they start to push the prices lower in the case of the major pairs there. So we'll take a look at the charts and then we'll come back to you in just a few moments. Okay, so let's start by talking about some of the trades that we were in last week and took profits on, or that we're still in at the moment. The first one is the Aussie dollar. Now, we've spoken about this for a few weeks now. We actually got into this the week before last. We took this on a rejection of this level here. So as you can see, maybe perhaps it's cleaner to show it on the daily chart. You can see that the price rejected this high here, giving us a little bit of a liquidity fade. We ended up getting in down here towards the 78.30 level. So if I just zoom in a little bit there for you, ended up getting in around the 78.30 level, around the break of the low of that candle there. I'll stop above the highs. We then held that for quite some time. Now the market, we were expecting the market to absolutely blast through these lows here. Unfortunately, non-farm payrolls came out on Friday, and as you can see, we've got this big spike to the upside. We actually added a position on the Thursday, which perhaps wasn't the smartest thing to do, but we did it anyway. Added a position on the Thursday. When it came up to the non-farm payrolls, we saw that the market hadn't traded really anywhere near significantly lower. So we therefore took profit on the trade that was in the money. So we had quite a few hundred pips on this trade here. So we traded it from 78.30 all the way down to around 75.50s, where we eventually took profit. So a very, very nice risk reward trade on the table for us there. We then kept our small position that we had when we took it through the lows there. We got our stops above the high. So we've got a much smaller position on this one here, but we were looking to add to any momentum move through the lows there. We saw that even if there was a negative non-farm payroll that came out for us, that it wouldn't change the canvas too much, and we'd still be expecting a big move to the downside at some point. So therefore, that's why we kept the one little position on there, because we felt that the risk was calculated, let's say. You know, we weren't going to take too much of a loss if the market completely goes against us and hits the highs up here. By the same token, we're still in the game if the market breaks through the lows and gives us the opportunity to take it further short. So the Aussie dollar, we took some profit on one of the positions. We added another, which is currently out of the money at this particular moment in time. We then took a euro dollar short last week, which is very, very close to its stop. I mean, if the market sneezes now, we'll probably be taken out, but pretty much sort of the same premise. And we'll look at that on the 4-hour time frame, because that probably illustrates it best. So what we've basically got here, is the market has been trending down. We believe that the euro dollar is going to go shorter. We saw an opportunity to get in on the break. Eventually we got in on a break of the, let me just find the exact position for you. We got in on a break of these lows here, so around 1.0850. We have our stop above the highs there at 1.1087. And as I said, at the moment, the market is flirting with our stop. If it takes us out, c'est la vie, nothing that you can do about that. Having said that, we're still very confident that this is going to go short. I mean, if you take a look at this in the grand scheme of things, let's jump back across to the daily chart. Look at how far the market has come. It's gone all the way down here. So if we do get a bit of a pullback towards these sorts of areas here, we're not going to be discouraged from this particular position. We're going to look to take it short again if the market gives us the opportunity. So the market's gone a long, long way. We do expect some pullbacks. We don't expect it to be plain sailing the whole way through. So if it does pull back, and if it does stop us out and break above these highs, so that's not a problem for us, because we'll still be looking for an opportunity to go short here. You know, even if we get stopped out once or maybe even twice, and the market still looks the same, then we'll still be looking to exploit our short euro dollar view by taking another sell opportunity from around this sort of region here. And to be honest with you, it actually looks quite good. If we were to draw in a sort of a trend line in here, you would see that actually this position here, it looks like a position that's going to pay us. And the fact that we're going to have a positive risk reward on any of these trades here allows us to be wrong in our entries once or twice and still come out ahead of the game and still come out with a profit. So as I said, even though we're flirting with our stop at the moment, we're not discouraged at all. We still think that the euro dollar is going to go shorter at some point in time. The other position that we have on at the moment is a pound New Zealand. We just got a small position on here because it's not a longer term position. So this was almost not a day trade, but much shorter term than some of our other trades. And as you can see here, what we're looking for is a break of this particular trend line, a bit of a collapse of this mini pullback here. We got in on a break of the trend line, then a retest of the trend line in there, and we got shorted about 1.9740. Our stops are above the highs, so we're giving it a lot of room there. As you can see, we're not just going to put it above these highs here because the market sneezes. You may get taken out. Now, I know a lot of people say, well, we want to keep our stops closer so that we don't have to lose as much. And obviously we can then have a bigger risk reward. But our view is that we don't want to artificially create a risk reward situation for us. We believe that by placing the stop a little bit further away, we're going to give the market a lot more room to be able to pay us. If you start putting your stops behind the immediate highs of candles and things like that, then all the market has to do is literally sneeze and you're taken out of the position. If you're serious about making money, if you're serious about staying in the game for the long run, then you need to start to look at these things and look at where you're going to get the best protection on your positions. And for us, that's putting it above the highs here. Now, that is a chunky stop. You know, you are looking at over 250 pips for a stop there. But the thing that you do is you just change your position size. All right. So it's not like you trade a constant position size no matter how large the stop is. That's the way a rookie trades. That's the way a struggling or a losing trader approaches the markets. A professional trader will just adjust their position size according to their stop. So let's say, for example, you know, hypothetically, let's say you have £1,000 in your account. All right. Just for a nice round number there, £1,000 in your account, and in fact, let's say £10,000 in your account. Okay. And you're trading at 1% risk. Well, 1% of £10,000 is £100. Okay. Now, if, for example, you have a stop loss of 10 pips, maybe you're day trading, then you can afford to trade a position size of £10 per pip. However, if you're going to be taking a longer term trade and maybe you need 100 pips, and you can't be trading for that £10 a pip anymore, can you? No, instead you need to change your position size and you need to be trading for £1 a pip. Okay, so that's just a very, very quick example there of how you need to be adjusting your position sizes according to your stop and not be trading just one constant position size, because if you do that, you'll find that eventually you're going to come unstuck. You're either not going to be able to take positions that you want to take, you're going to strangle your positions, okay, so you're going to try and get the stop in way, way, way too close, or you're going to take way too much risk for your account size. And either one of those three options are not good options, okay? So anyway, we're short the pound New Zealand at the moment. We've got a little short on the Aussie dollar, and we're also short the euro dollar. We will see how that plays out over the course of the next week or so. The final position that we'll look at is the Euro New Zealand. Now, this isn't one that we are currently in at the moment. It's just one that we are looking at as a potential to get in. So with the new Euro New Zealand, it's very, as I said, it's very, very similar to the pound New Zealand. The market has been trending down. You can see it's clearly breaking structure, so making lower lows and lower highs all the way down there. We're literally trading into fresh air at the moment, really. If we look at the pullback on a 4-hour perspective, we can see that we've got a nice orderly pullback here. The market is respecting this trend line. It's touched it not once, but twice, 3 times now. And we'll be looking for a move through the trend line. Now, it's important to understand that if the market moves sideways through the trend line, we will not be taking that. We're not looking for consolidation to trigger a trade. That's just the worst thing to do on the planet. We need a directional move to trigger this trade. So we'll actually drill down into the 1-hour chart for this and basically look for the market to break through this trend line. Either look for a move through one of the lows, so something like the 1.4406, or break through the trend line, then pull back to it in the similar fashion as the pound New Zealand, reject the trend line here, and then give us an opportunity to take that short on the rejection of this trend line. Okay, so that is that for all of the positions that we have on the table. We've got the Aussie dollar we're in, euro dollar we're in, and the pound New Zealand. The only other one that we're looking at is the euro New Zealand. And that pretty much wraps up our video for this week. That wraps up the Forex Focus. I hope you've all enjoyed the show this week. Thank you very much for all of the questions that you keep posting. Really, really enjoy them. We're going, as I said in the last week's video, we're going to put together some videos where we answer all of your trading questions, whatever they may be. So, whether it's how do you trade support and resistance, what's the best approach to having, stop losses if you're day trading, all of that kind of good stuff. We're going to put together some videos where we, come here and answer all of those questions. Thank you again for all of those emails that I got through yesterday and Saturday saying it's the Forex Focus going out this week. Apologies that it's coming out on Monday. But as it's been the Easter weekend, I promised my wife that I wouldn't be doing any work. And obviously, I just think it's a bit of bad karma to try and work on an Easter Sunday, So, but thank you very much for watching. I hope you all enjoy it. Please feel free to post comments below the video. Give us a thumbs up if you like the video. And until next week, good trading and have a very good week.